Going public this way, is there any protection for investors on the downside? Do they pretty much make sure that there are some buyers lined up that if this bad boy starts to slide, there's going to be some support?
Right. I think you really have to understand just what exactly is a direct listing. You have to understand what the reference point is. You have to understand how there will be a designated market maker, probably Bob Pisani might tap him on the shoulder later today, and how they've hired financial advisors like the likes of Morgan Stanley to help drum up that demand, Brian.
Yeah, and do you think there is going to be a lot of demand for this? Because I think what the NYSE is probably trying to avoid is another Uber.
So I do, and I think all the pager duties, all the names that Leslie just rattled off. Again, if you're a portfolio manager in this sector, you have to start your accumulation of this type of company at some point. 10 million users, active users, a well-known household name, and the fact that they do have cash in the balance sheet, you will be accumulating the stock. There's a lot of things though around a direct listing that we should probably get into as far as those that are selling the stock today.
Yeah, I would imagine one of those things, John, if this was considered a, quote, better way to do it, why wouldn't more companies do it this way?
So this is the better way to do it for not paying fees. We see anywhere is north of 6-7% of the gross proceeds going to banks. In this situation, Slack felt, hey, look, our name is well known. We don't need investment bankers to help us market. The downside risk is the fact that you didn't have the traditional book build that Leslie was talking about over the 2 weeks, where you can firm up a price. I would point to, though, in the prospectus, you should always go to the prospectus. That's, Brian, the prospectus is where all the answers lie. Right there in the first 1 or 2 pages, it did say it had a $26.38 average from the month of February to May of this year. And that's probably why you're seeing a reference price today of 26.
Yeah, so 2680 would be in that prospectus where they were sort of trading internally. I get that. That's an excellent point, and I think an important point here. And I understand you don't want to pay these big fees to banks, but the banks do ostensibly serve a role in sort of marketing those securities to make sure that they are taken care of. Do investors have to worry when a company, I get, for lack of a better term, John, gets cheap on the IPO?
No, not at all. I think there's demand, and the banks will be there. Again, point to the prospectus. There's well over 10, maybe even a dozen that I saw that have been hired as financial advisors. So those clients of those banks will participate today as well. And you should see a strong demand today. That book will be built on the stock exchange, just like when you launch any other IPO, and open up for its first print price.